Hi, this is PR Sundar. Welcome to this special episode where I am going to talk about the market outlook for the next few months. You know that markets have been very highly volatile, and it has been like this for the last few months. Why to talk about last few months? Even from January onwards, and the markets have been highly volatile all over the world. And in the recent fall, Nasdaq has already fallen 33%, S&P 500 has fallen more than 20%, and we did not fall much, but we have our own problems, a continuous selling by FIIs. And so far, FIIs have already sold more than 2.5 lakh crore, and 2.5 lakh crore is more than $30 billion. In just last 6 months. The recent trend all over the world is that, the people are selling the shares which are having high growth, means high P ratio. The growth stocks usually trade with a high P ratio. So, all those stocks having high P ratio are being sold into. And that is where the major concern comes for India. Reason number one, Indian markets, due to its growth potential, and we are the largest democratic country in the world, and naturally the growth story is there. But all along these years, for the past 10-15 years, and the Indian stock market valuations has been much higher than the counterparts. When I say counterparts, other emerging markets. Let us say for the last 10-15 years, I've been observing Chinese markets, and I find that they are trading an average P ratio of about 10. But at some point of time, we have gone to a P ratio of about even 30. So that is almost 3 times. And now I think we are trading around P ratio of about 18. And that is still 80% premium to Chinese stock market valuations. And compared to other emerging markets, so our valuation is about 60 to 80% higher. But in stock market, the higher valuation will continue to be higher valuation for an extended period of time, and the growth may catch up. Why high P ratio for a growth stock? Because the growth will catch up in the future. That may not be the case with other sectors. In the short term, and all this panic is there, and FII selling is there, global cues is there, okay. What is likely to happen in next 1 or 2 months? Maybe we look at the chart and we will have some better picture. This is the chart I'm taking from January. So from January and to March, so we have fallen very drastically, and we have fallen, I think, from 18,300, 400 to 15,700. That's almost nearly 16-17%, and we are just short of 20% in the official bear market. And what was the reason here? And the reason here is the Ukraine-Russia warfare. And February 24th was the war broke out, but even before that there were a lot of speculations, lot of things. Then after that, lot of news. So we made a bottom sometimes in the month of March. Precisely on March 8th. Then after that, the relief rally came. You can't say it's a relief rally, it's a complete recovery. It's a complete V shape. It is such a good recovery. But then you look at this fall. This is the first 2 weeks of May. In the first 2 weeks of May, Nifty has fallen nearly 1,700 points. What was the reason for this fall? Is the US inflation data and the US Fed rate hike for the first time. And that was the fear, and our stock market was hammered. In just 8-9 trading sessions, Nifty came from around 17,400 to 15,700. Then again, almost V-shape recovery. This is a very good V-shape recovery, but here it's like only half the way only. Then again, you can see this is the June 2 weeks, second week and third week. And again, you can see there's a huge fall, and this time from 16,500 to 15,200. So almost 300 point fall. So why? That is second Fed rate hike, and the higher inflation data from US and UK. So if you see this year, three major fall has come. One major fall is because of Russia-Ukraine war. Second major fall, first Fed rate hike, then recovery, and second fall, again second Fed rate hike. Now, this brings back to the next question. So what is going to happen in the next 1 or 2 months? So next month also, same story again. One more inflation data will come and one more Fed rate hike will come, and so how the market is going to react. Now, there are two possibilities. The next Fed meeting, I think it is on end of July, about 1 week, 10 days before the inflation data will come. Assume that the inflation data comes better than expected. Last month, the inflation data expected was 8.3, it came at 8.6. That is when the fear gripped the market and the markets fell. Assume that the inflation comes better than expected. Then analysts will say the worst is over. The inflation has peaked out. This is very much a possibility because for the last few days, the crude oil has been down and energy takes a lot of thing in inflation data because transport is main thing for any product. So if that comes, how last 2 times Nifty fell about 1500 to 1600 point, and within few days, the same way the next few days market can shoot up 1500 to 1600 point. And same thing, I'm just showing you the Nifty chart. You look at the Dow chart or Nasdaq chart, will be similar. And Nasdaq has fallen 10% in just 3 to 4 trading session after last month inflation data. So if the next month inflation data is good and if the people think the worst is over and the markets are oversold, and then Nasdaq can shoot up 10% in 3 to 4 trading sessions. So that's a very much possibility. There is a possibility market can shoot up 5 to 10% in case of Nifty, more than 10% in US markets. That's a very much possible. That's a bull case scenario. Coming back to the bear case scenario, last 2 times then Nasdaq has fallen nearly 10%, and this time also if one more bad data and one more aggressive Fed rate hike. Last month, people expected 0.5 but they hiked 75 basis point. So that's why it has fallen. So next month also people are speculating it's going to be 0.5 or 0.75. So if the inflation is better, they may go for 0.5. But inflation is very bad, they may go for 0.75. So if that is the case, the market is likely to see one more sell-off, and that sell-off can be very, very brutal, and usually the last leg of the correction will be very, very brutal. And why do I say last leg of the correction? Why not market cannot continue to fall 2 months, 3 months, 4 months down the line? The reason is that by looking at the past few days, and markets are stabilizing all over the world despite negative news flow. Say for example, 2 days before, Fed Chairman Jerome Powell announced that US may go for a recession, and he said he will continue to raise the interest rate, is committed to bring inflation down, but in that process, so maybe there is a possibility US may go for recession. Despite such a strong statement coming from such a top official, US markets did not react negatively on that day, and in fact US markets for the last 3 days has been moving higher. No matter what is the bad news, at some point of time, everything already been factored in, and then so the market, knee-jerk reaction may fall, but then after that it may recover. So that is why I am saying if there is a good news, the markets can rally very big next month, but if there is a bad news, for knee-jerk reaction maybe 2-3 days it may be down, but after that it may not rally, but at least it will recover. So the next inflation data is very, very important in July. If I am looking at the chart, and once that last time low broken 15,700, in the long term there has been no support. The long term support stands around 14,200 only. From 15,700 to 14,200, so there is no other support, and maybe 15,000, maybe a round figure, a psychological support may come. In case if a bad inflation data in a knee-jerk reaction selling, we might break even 15,000 or even we may go to 14,200 also. But other than that, there is a high probability our market may go to 16,500 to 17,000 by end of July. That all depends upon US inflation data. But somehow I feel that we are somewhere near the bottom. So hope you enjoyed watching this video. Thank you for watching.